Welcome to this video. In this video, I'm going to be doing a Buda juice stock analysis. Now, if you don't know what Buda juice makes, they're making non-GMO and non-preservative juice, and they're doing quite great. Now, you're also going to notice the stock graph looks a bit funky, and that is because it is quite a new company. It was first publicly traded on January 8th of this year. Now, it was first publicly traded at 7.50 bucks. I'm not sure why my software here shows something else. If you bought on the IPO, you're up quite a bit already, which is of course quite nice to see. Now, there is two problems with this company. The volume is very, very low, meaning it's hard to buy stock shares and sell shares because there's really not that many in the market. And these shares afloat as well, not that many, so it's quite easy to sit on a large amount of this company because there are so few shares afloat. Now, the beta is negative, and that is of course quite common because it's a 1-year beta, and this hasn't even been on the stock exchange for an entire year. If we take a look at the RSI, it is quite nice for such a small company. We see it in the upper RSI as well as the lower RSI, but in the main parts, it is of course in the upper, given that the stock price has also risen. But most of the time, you also see just quite close to this middle here. Now, if you don't know what RSI is, that is the relative strength index. So if it's between 70 and 50, it's in the upper channel, meaning it's trading upwards. If it's above 70, it's trading upwards quite rapidly, and this is being overbought area. It's between 50 and 30, it's in the lower RSI, this meaning the stock price is falling. And if it's below 30 down here, it means the stock is being oversold. Now, something I like about this company quite a lot is their revenue and net income. We can see they're increasing their net revenue, which is absolutely amazing. And just, of course, the net income is positive. That is great for such a new company. Now, it was first being made in 2013, I believe. Now, their net margin is insane as well. Quite great, because this means chances are a company like maybe Unilever or Kraft Heinz might come and scoop a company like this up because they have such a positive cash flow. Now, that also means there's one more great thing. If we take a look at the financials, they have virtually no debt, and the reason for that is they have so much cash on hand because their margins is so great, meaning they can actually expand using credit and not debt because they have a very positive cash flow. Now, we can't see the price to sales and price earnings because it is so new, so TradingView hasn't even calculated that yet, so I did that myself. So currently we have a PE of 12.1 and a price to sales of 9.9, which is quite nice. I also like how few employees they have, even though the company is 13 years old with a great market cap or amount of employees. So 39 employees, but a market cap of 125 million. That is quite great. Now, I do have a problem with the amount of shares. We see quite few shares. So free float, we have almost 4 million, and closely hold, we have 8,600,000. Now, the problem with this many closely hold shares is it's quite easy to get diluted. Of course, this is most likely the CEO or other early investors. Now, if we look at the revenue, now we can see how they make the money. That is branded non-organic, private label, and branded organic. So this private label might tell us that they're actually labeling out their products to other companies, which is quite interesting if they're doing that. Now, currently they are only in the United States, and they're actually only in Texas. So if you take a look at their products, we can see some of the products like this is shots. These are quite great. I haven't tasted exactly this, but I know them from my everyday job. So, and we can also see on their website it says no GMO, no preservatives, and no artificial ingredients. And from farm to fridge, they're actually stored at 35 degrees Fahrenheit from the second they're taken off the plants and until you see them on the shelves. Now, they also make these bit larger ones, and they also make some other ones which we can't see the full picture of. And they're only in Texas, as I said, but they're already in H-E-B, Costco, Kroger, and Brookshire Brothers. I do like the fact they're primarily focusing on Texas at the moment before going nationwide, because this means they can really drill down on their core business only being available in Texas. Now let's get back to the stock itself. Now, if we take a look as well on the technicals, just take a look at that. On the day, it's a buy, and on the week, it's a buy, and on the month, we don't even see it yet because, of course, it is so new. And the technicals say what should you do with a stock given its price action. So if it's moving upwards for quite a while, the technicals is going to say buy. If it's moving downwards for a while, it's going to say sell. If it's moving sideways, it's going to say no. Now, we don't even have any analyst rating on this because it is such a new share, and it's quite difficult to say what should the price point of such a stock be. So personally, I do think within a given year, 8 to 15 bucks, I know that's a huge range, but I would definitely imagine it's going to be that. I would be surprised if it went lower, unless, of course, it makes some mistakes and it doesn't even continue with these net margins. Now, something else is I wouldn't be surprised if they were bought off the stock exchange by another company like Unilever and so on and so forth, because they have so positive cash flow. If you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice, it's purely for entertainment and educational purposes. But if you want to see more videos like this, please don't forget to leave the company you want to analyze in the comment section below.